Hello everyone, Ranjit this side. So in this video we'll be discussing about the volume adjusted moving average, or it's also called it's a trading strategy. And the topics that we'll be covering in this video will be what is volume adjusted moving average, and then how to calculate it. Then we will try to understand how the background behind this VAMA, and then we will try to implement it. How to basically we will try to understand how the VAMA works, or moving volume adjusted moving average works, and then we will write the Python code to implement this. For those followers or viewers who don't work with Python, I will also go through the Excel workbook, or let's say Excel VBA code macro, and then last but not the least, I will also share the code how you can implement directly on the TradingView website as well, right? So just to show you how this works, so just a second. Now first let's understand what is VAMA, right? So see, volume adjusted moving average is a variation of, let's say, a simple moving average that incorporates, let's say, the volume. Now when I say the volume, so unlike the simple moving average, which is like it gives the equal weight to each period, or let's say the each time frame, right? What volume adjusted moving average does is basically gives it adjusts the weight of each period based on the trading volume. So if the volume is high, then it gives more weightage to that, right? And that's how it differs from the simple moving average. So for an example, let's say if you could see over here, I'll just show you what it is, and then maybe we can discuss it detailedly. So this is a 5-day moving average, EMA, or exponential moving average. I did not take the simple moving average but exponential moving average. So the difference between the exponential moving average and simple moving average is more like exponential gives more weightage to the recent period rather than equally weighted. But then in the simple moving average, it gives weightage to the each period, equal weightage to each period. But then when it comes to VAMA, it's more like it gives weightage to the volume. So I was just trying to differentiate between these two. So I'll just hide VAMA first. So this is our, let's say, exponential moving average, the blue line, and then we have the volume adjusted moving average, which is the yellow one. So if you see, there is a slight kind of, let's say, difference when this indicator, or let's say the trend line is created. Why? Because this changes based on, or let's say the yellow line changes based on the volume as well. So volume is given more weightage. And then for an example, let's say over here, so here we have the high volume, and then based on that the yellow line has moved above the exponential moving average. Let me just add simple moving average, maybe you'll be able to understand more. So this is our 9-day, so let me just make it 5-day moving average. So and then let me hide exponential moving average. So if you see, there is a major difference between the simple moving average and the volume adjusted moving average, right? Why? Because we give more weightage to the volume. Okay, I'll come back to this more detailedly. Now, like I said, to calculate the first you need to calculate the typical volume, right? Let me just show you the formula maybe. Okay, so yeah, so this is the simple, like I said, is a variation of the simple moving average that incorporates volume into its calculation. And then unlike a simple moving average, which gives equal weight to each period, VAMA adjusts the volume of, or the weight of each period based on the trading volume. So whenever there is a high volume in the period, so the indicator, let's say the trend changes based on that. So which means, like I said, the higher the volume period are given, the more weight, and which makes it like more dynamic towards a dynamic indicator that reflects somewhere around, let's say, the market sentiment, or let's say what is happening in that market. Now to understand the logic, or let's say the formula, so VAMA is, n is the number of days, right? And or periods, let's say. And then, so when I say period, why? Because we have different time frames. So we have daily, weekly, monthly, and fortnightly. Fortnightly is kind of rare, but yeah. And then we have hourly and minutes, or 50 minutes, 30 minutes, like that. So the n is based on that, right? So it's the multiplication of, so VAMA is the multiplication of price and the volume, and then we do the summation part, and after that we divide it with the volume. So these are, price is typically the average of the high, low, and close price, and then volume is the trading volume of the period, and n the number of periods over which is calculated, right? And then when we are comparing it with the simple moving average, so it's basically the price, or the, let's say, the total summation of the price divided by the n number of period, So here the price refers to the closing price or any other chosen price metric of the asset. So normally we take the closing price as the price. Right. So yeah, like I said, this is how the VAMA is calculated, and then let's try to interpret what the is. So VAMA is interpreted similarly to the simple moving average, like I said, but with the added sensitivity to the volume changes. So whenever the volume changes, the VAMA indicator, or let's say the trend changes, which gives you more the realistic scenario of what is happening in that particular stock, or let's say the market. Right now, when the VAMA rises above the price, it suggests that the current uptrend is supported by the strong volume, and then conversely, when the VAMA falls below the price, it may indicate a weakening trend, as the higher the volume does not support the current market level. So now if we go back to the chart that we have, so what did it mean, or let's say what did it meant when we say that when the price is above the price? So this is our, let me just hide the simple moving average. So whenever this line goes above the price, or let's say the current price or the closing price, it says there is a trend in the market, and then based on that we can take the trade. And then whenever there is whenever the VAMA closes below or between this candle, we can say that the market has reversed, and then there is a chance of sale. I would say it's a good indicator, but then there are a couple of, let's say, the restrictions which I will show you. Okay, next is implementing VAMA in a trading strategy. So combined with other indicators like RSI and MACD, and now this is for the confirmation, and this is really critical. Why? Because you should never be, if someone says that only one indicator can help you out to understand the market sentiment, or let's say the market condition, I would say that guy is a fluke. The reason being, you should never be trading it with, let's say, you should never be trading a trade or taking a trade with just one indicator, right? Because first of all, we do not have much control over that, but then again, it depends on whether that indicator is the lagging one or the leading one, right? So I would say go for RSI or MACD for the confirmation part. So I'll just show you the RSI part. So what does this RSI tells you is mostly like, now let's say, let me just hide, it's okay. So okay, so what it does basically, now let's say here the indicator shows that the VAMA line has gone above the price, and but we also need to make sure that the RSI at that particular point of time, what was the RSI? So if it is above 50, I would say you can take the trade, but I'm still skeptical whether to go for the trade when it's above the 50, but still, I mean, it's okay. We can surely check or verify or confirm. Now, if the market is going down, then of course here for an example, the VAMA line has gone below the current price, and then here if you see the RSI is also gone below 50. So here you can sell the stock, or let's say short the stock. So this is the scenario, and then if you go back to our, this is what it has mentioned. If the price crosses above the VAMA and the RSI is above 50, it's a strong buy signal. Right, now simple trade. So this is something which we have already gone through in the TradingView website. Now, so the conclusion is, now this is how you can take the trade, and you can place the entry and exit. So if you want to know what was the loss, and also I have already covered in a lot of videos what could be the stop losses, but see, stop loss depends on how much the volume is, and how volatile the market is. So I'll not go to that, but this is how this indicator works. Now let's go back to the Python code, because that is also important. That's all that's all what is algorithmic trading with Python. So for that, let me take my code. Right, so this is how the chart is created based on the algorithmic trading with the help of Python. Now I'll just go very quickly what we have done over here. So we have imported the pandas, numpy, matplotlib, and yfinance. So we don't basically need matplotlib. This is just to show you how the data looks, and then how the chart looks. Right. So for what we did, we calculate the VAMA, which is the volume adjusted moving average. So we took the volume of the mean of the volume, which is, and before that we gave the window of 14 days. The chart that I shown you on the TradingView website was more on the 5-day, right? Because I saw that 5-day was more of, let's say, was close enough with the chart. But I mean, it's totally up to you. Try different scenarios or combinations to understand which window is good. So if you are taking, like, let's say, a swing trading, I will not go for even 5, 14 or 25, but I will go with, let's say, maybe somewhere around 50, 100 or 200, like we do for the moving average or exponential moving average or the moving average. I would go with that if you are going for the simple swing trading, right? So and then this is how the calculated. So we have adjusted close, rolling window, and this window is 14. We are calculating this with the help of this function, which is more like the formula that I shown you or the logic. Now vbl.ns is the data that we are trying to download from, let's say, Yahoo Finance website from 2020 to 2024, and then the figure size is 14 to 7, which is more like the size of this graph and or chart. And then we are saying that stock data, which is our stock data dot index, adjusted close, and the stock data dot index. So basically we are just making sure that these indexes are working parallelly. And then we have X label as data date, and then Y label as price, and then legends and show. So this is how your chart is created. See, if you notice over here, there are many. If you do the back testing, I would say there are many points, touch points, wherein this will give you a good result. But I'm not going back and checking what is the rate of return and all, because see, this is a good indicator. But again, like I said previously, I will not go alone with this indicator, but surely, you can test it. And if you need any kind of support or let's say help, please let me know. You can surely drop me email, or you can even comment in the comment section, and I will be surely be able to help you out. Right. So this was the code. I will share it on my website, and then you can surely take it. Yeah. Now let's go back to what we discussed. So we completed Python code for VAMA. Now let's go back to the Excel VBA code for VAMA. Right. So let me just take. So this is the Excel for us, and then we will go to and now let's run this F8. So what was the time period? Did I pass the time period? What was it? Unable to open the internet site, cannot return the object you requested. It must be probably for that period. Let me just check. The data is there. See, let me run again. So we have active sheet. Let's check what is the active sheet. Sheet 1, which is right. Save data, and then unable to open. It could be because of the date format, because I gave. Let me just try this one. What I did, I gave the start date and end date. So 2020, yeah, this stock was there. So let's try again. I had a VB code for false strategy, and then what we did over here to download the data. Did we download the data? No, I did not. I don't want to write. So let's say search VBA download data. I think somewhere I did write the code. Let me check. It must be somewhere here as well. Okay, so basically what we did over there was more like we did not give the starting date. How many lines are there? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. Let's go back. F8, F8, F8. How can this be possible? Pin bar, let me search it in my code. So this was the list of stocks, and then developer. So this was the syntax. So this was the ticker, and then let's say download data. Okay, Excel Python stocks. So what we will do, stocks. Okay, so download stock. We will pass symbol as string, and this will, let's comment this, right? So we'll create a CSV file, and then okay, so where is it? Yeah, let me just run this, and then maybe I can show you. Okay, so what we're gonna do over here, we will download the data from, let's say, Yahoo Finance in the Excel VBA. So this will be the data format. We have date, open, high, low, close, adjusted close, and then the volume. And again, these two columns are important for us. Now let's calculate the. So if you see over here, it's starting from 15th row. I will show you why. So before that, let me just close this or delete this data. Okay, let's go back to the VBA code. So this is the VBA code that we have written, right? See what I did, I tried to refresh the Excel sheet directly from, let's say, Yahoo website, but that did not happen. So what I had to do, I had to download the data with the help of course, the VBA code. It was not manual. So I downloaded it into a folder, and then from there, my code again picked it up. I'll show you. So this is how the calculation of VAMA is done. So first, this is the sheet, and I added the code in a module. So I right clicked over here, added insert, and then a module. So that's how this module came in. And then I mentioned which symbol I want to download the data. So if you want to download the data from multiple or many websites, sorry, many stocks or let's say symbols, you can. There's one more video. I think it was pin bar, if I'm not wrong, pin bar strategy. So maybe you can check that. Now after that, this is where the file will be kept. So okay, so before that, let's go to this function or subroutine, download stock data, and then I have passed the symbol over here. And what it is doing, first it's checking the folder path. So this is a folder path where the file will be kept, and then this is the syntax to download the data from, let's say, Yahoo Finance website. And let me tell you, we do not have the start date and the end date, so it's like it's downloading the whole data. We could have done that, but I did not go for that. So basically it's downloaded the whole data. Right, so after that it came back to this place. So what it did, it converted the data into, so basically it picked the data with the name of the sticker, the CSV file. So always try to save the data with as a CSV format, because importing the data is easy. The file size will be lesser rather than the Excel file. So always try to have that. And then we try to convert columns, data types, array, refresh background, which is false. I mean, we don't need that. So before that I cleaned the sheet. So basically what we are trying to do, we are trying to bring the data into the same sheet where we are trying to write the code, right? So and then we calculated the last row of the sheet. And then okay, let me run this. Maybe I can stop it somewhere over here. F5. So it downloaded the data. So what data it downloaded, I'll show you that as well so that it's easy for you. So this is a folder, okay, where the file got saved. Yeah, there is no file name, but anyways, somehow it worked, right? I don't want to go back and check, but yeah, so it pasted the data over here, and then it added a new column named VAMA. So this is the VAMA column, and then weighted sum, total value, total volume, it calculated, and then weighted sum and weighted volume. So this is the VAMA calculation. Right, so this is the VBA code to calculate the VAMA. Now let's go back and see the TradingView website and make you understand, or at least show you how did I manage to create the Pine code. So this is the Pine code output that I have created. So if I go to the Pine editor, let me check. Yeah, VAMA code is there. So basically we are creating an indicator. Can you see? Okay, so we are creating an indicator, volume adjusted moving average. You can give whatever the name you want. The input date is 14. So if you want it to be more like close to the market, maybe you can make it somewhere around 5. So yeah, you can do that. And then the sum of price volume and then the total volume. So this is the calculation that we did, and I have shown you like many times. And then this is the plot. Now this is the output that we are getting. So if I just try to change it to, let's say, 5, yeah, it's already 5. I made the change, so it's more closer to the scenario. Right, now let me go back to the presentation file if I'm missing something. Oh, it was a long video because I messed up the VBA code somewhere. Yeah, so now just to conclude, what we did, volume adjusted moving average is somewhat similar to the moving average, but it is more, the weight is more given to the volume rather than the moving average, right? And then this is, let's say, more realistic, I would say, because volume is one of the biggest, let's say, the parameter when it comes to trading or stock exchange, because many things depends on the volume. So based on that, I would say this is a good indicator, but don't do it alone. I mean, not alone means alone, but yeah, don't do this indicator alone, but use maybe like RSI or MACD. So try to incorporate them, so that of course you can have an informed decision rather than taking a false signal, right? So thank you so much. Have a great day. Please make sure to like, share and subscribe. Till then, take care, drink plenty of water and eat good food. Thank you so much. Bye.